Bitcoin has been on an impressive rally this year, surpassing traditional assets and even outperforming the tech-heavy Nasdaq index. As a result, many investors and analysts are wondering where it could go next. According to Vettel Lund, a senior analyst at K33 Research, Bitcoin could peak at around $45,000 next month. This prediction is based on the premise that Bitcoin's current performance is closely following its surge in the first half of 2019, which marked a solid recovery from a year-long bear market. However, it's important to note that the cryptocurrency market is highly volatile and subject to rapid price fluctuations. While historical patterns may resemble the current performance of Bitcoin, it's difficult to predict how the market will respond to various factors, such as increased regulation or shifts in investor sentiment. One interesting aspect of the recent bull market in Bitcoin is how it caught many off guard. Crypto observers on Twitter have referred to it as a hated bullish move. This is because several prominent traders were positioned for a continued sell-off in the first quarter, and the rally caught them and others off guard. A hated bull market in the cryptocurrency industry typically begins when market sentiment is at its most pessimistic and gains momentum, as investors who had previously reduced their risk exposure in anticipation of a continued downward trend start to feel underexposed and shift toward a bullish outlook. Despite the recent surge in Bitcoin's value, there are still concerns around the environmental impact of Bitcoin mining and the potential for increased regulation. These factors could impact the future performance of Bitcoin and other cryptocurrencies. In terms of the environment, Bitcoin mining requires a significant amount of energy and computational power, which has raised concerns about its carbon footprint. Several studies have estimated that Bitcoin mining consumes as much energy as small countries, leading some to question whether Bitcoin is worth the environmental cost. However, it's worth noting that some Bitcoin mining operations have been experimenting with renewable energy sources to reduce their carbon footprint. In terms of regulation, the cryptocurrency market has faced increased scrutiny from governments and regulators around the world. Some countries have banned cryptocurrency trading outright, while others have implemented stricter regulations to prevent money laundering and other illegal activities. Increased regulation could impact the future performance of Bitcoin and other cryptocurrencies, so it's important to stay informed about any regulatory changes that may occur. So, what does all of this mean for investors? While it's possible that Bitcoin could peak at around $45,000 next month, investors should approach these predictions with caution and carefully consider their risk tolerance and investment goals. The cryptocurrency market is highly volatile and subject to rapid price fluctuations, so it's important to stay informed and make informed decisions based on a thorough analysis of the market and individual investment circumstances. One way to stay informed is to follow reputable sources of crypto news and analysis. This can include industry publications, social media influencers, and online forums. However, it's important to verify the accuracy of any information before making investment decisions. Another important factor to consider is diversification. While Bitcoin has been a high-performing asset in recent months, it's important not to put all of your eggs in one basket. Diversifying your investments across different asset classes and cryptocurrencies can help reduce your overall risk and protect your portfolio against potential losses. In conclusion, while Bitcoin's recent rally is impressive, the cryptocurrency market remains highly unpredictable and subject to rapid price fluctuations. Investors should approach predictions with caution and carefully consider their risk tolerance and investment goals. By staying informed, diversifying their investments, and making informed decisions, investors can navigate the cryptocurrency market and potentially benefit from its growth and potential upside.